Well, let's talk about gas prices, which are continuing to climb. The national average now breaking above $5 a gallon. That's according to AAA. Yahoo Finance's Rick Newman joins us now to share the details. Rick, obviously, this is a contributor to the macro picture that we're seeing on high inflation, the spill across every sector as a result of it. What are you seeing on that front? What's the significance of breaking $5?
Well, first of all, it freaks out drivers. I mean, gasoline prices have an outsized impact on consumer psyches just because we see the price advertised more than we see any other price. And it used to be that $4 was the price that told you something is wrong out there. And now a 5 handle makes it even worse. And this is not going to get better anytime soon. Moody's Analytics is saying that based on the current cost of wholesale gasoline, which passes through at the retail level on about a 2-week lag, they think prices could easily hit $5.50 within a couple of weeks. So this is going to be a painful driving season for people driving on vacation.
And yet, Rick, we got data from AAA last week that seems to point to demand still being there. I realize some people live in areas where, or actually most Americans live in areas where you have to drive to work. But I wonder how you're looking at that number. I mean, $5 is certainly sticker shock already. And what's the threshold at which you think drivers maybe say, I need to reconsider the car I have, maybe the driving pattern, where I go? I mean, this is kind of typically the busiest time of year when there is high demand for gas.
I don't think there's any single tipping point. And, we've seen this in the past. We saw this, for example, in 2008, when gas prices briefly went over $4 for the first time. I think that was higher on an inflation-adjusted basis than we have now. And suddenly you could not find a hybrid. Back then it wasn't EVs, electric vehicles. It was hybrids like the Toyota Prius. And you simply couldn't find them because they sold out. People, without a doubt, who are in that buying cycle, considering a car, absolutely respond to high gas prices and downsize their purchase plans. So I'm sure that's happening now, but everything is messed up right now. I mean, we know we're still not through the semiconductor shortage, so there is not a full supply of all the vehicles that people might want to get. By the way, consumers during the last few years have basically told automakers, we don't want your stinky little cars. We want SUVs and pickups. So they're not even making that many, and we're just not far enough along on electric vehicles yet for there to be enough of those for people to buy them. So this is going to shake out. I mean, eventually, we're still in a pent-up demand phase following the coronavirus lockdowns, and I think people seem like they're willing to suck it up this summer. But if we still have these prices going into fall, I think that will be the point at which people say, enough. I need to really curtail my driving. And of course, if it goes high enough for long enough, this could trigger a recession, though it doesn't look like that in 22.
Yeah, no short-term help for drivers at all. Yahoo Finance's Rick Newman, thanks so much.